tea businesses in India and Indonesia. We'll bring you our interview with the CEO, Alan Jope, shortly. Matt, futures point higher.
Yeah, let's take a look at where futures are trading right now. Got a 0.7% gain on the Euro Stocks 50 benchmark index. The FTSE futures are up about 0.4% right now, and DAX futures are also gaining a little bit more, about 0.6%. U.S. futures also in the green, so it could be a risk-on day. As far as European markets, live trade is opening up now. So here's the global macro movers screen. The GMM shows on the left-hand column the equity indexes as they open up, and you can see the FTSE and the Euro stocks have both opened up about 1/4 to 1/3% right now. And we're going to see the DAX. Wow, the DAX opened relatively early, up 0.6%, as has the IBEX in Madrid. So markets are opening higher, even though we have these U.S.-China tensions that continue to escalate. According to the South China Morning Post, China is moving to close the American consulate in Chengdu. That comes after the U.S. forced the closure of its China's Houston consulate in one of the biggest threats to Good
morning, everybody. Welcome to SG Trader Live channel. What we show you today, you can see only one screen of our trade station. You will see during the day 5 Forex pairs on your screen. Japanese yen, British pound, Canadian dollar, euro, and Bitcoin. All pairs we trade live in front of you. We place order before it will get executed. 1 pip equals 100 pounds, except Bitcoin, where 1 pip equals 10 pounds. You can see on your screen ticker what we already hold. We still hold euro, and we hold position on Japanese yen.
I guess markets are thinking ahead to the election and aware that whilst clearly there's been quite a lot of US-China trade tension over the last few years, that come November it could be a different scenario. And yes, it's obviously serious what we're seeing in terms of the measures taken at the moment, but compared with an escalation in tariffs or something like that, which the market has had to contend with in the past, it's much less serious at the moment.
Yeah, well, I was listening to one guest on our previous program, Daybreak Europe, talking about how this is tit for tat. This is one small measure that builds on another small measure, rather than being two sets of military that stand off against each other in any part of the world, which obviously would be very different. What about the fiscal side of things? Because the market seems to be maybe putting aside concerns around geopolitics and hoping that fiscal support from the US will be forthcoming. Do you expect to see that? Is that critical to your investment strategy?
I think it's absolutely critical. And you know, you've had people getting about $1,000 a week, which is more than many people were earning before they went on to benefits. If those unemployment benefits become significantly less generous, which I view as a risk, then the sort of support to incomes that we've seen is going to be reduced, and that could have a knock-on effect to people's ability to service their mortgages, to do online shopping, and obviously that could impact some of the stocks which have held up remarkably well so far.
What do you think about stocks that haven't done remarkably well? You know, a lot of people are wondering when it's going to be time for value investing, and also kind of taking a punt on industries that have been hit harder. Yeah, so I mean, if you look at the market at the moment, what strikes me is that you've got this massive dispersion. So you've got department stores which are down nearly 60% year to date. You've got online retailers which are up over 60% year to date. So clearly, if it looks like we're making progress towards the vaccine, and certainly if a vaccine was approved, then I think you'd see this pretty significant rotation out of the winners year to date and into the losers. But that does rest, I think, on us getting a vaccine, and obviously there's still uncertainty around that. What it creates at the moment without a vaccine is a pretty difficult position for investors, because they're faced with either buying into the beaten up stocks, which are by definition the most exposed to COVID, or going for the stocks which we know are less exposed to COVID, but are now much more expensive than they were at the beginning of the year. So it creates a very difficult situation, and our approach to that is to look for value, but to look for the value names which, if we don't get a vaccine in the next 12 months or so, can still survive.
And thinking about that vaccine search that is ongoing and does seem to pervade everything we talk about daily, Mike, do you see assets that are uncorrelated? Does your research throw up any assets that are uncorrelated to this particular search?
Well, not particularly. Really, when you look at it, it does come down to, certainly at the equity level, you've got these losers and winners, right? And so the big risk in my mind is that if you do get a vaccine, I think you're going to see some of the irrational exuberance that's going on in some of the growth sectors unwind, because we've seen a couple of examples of that already, and I think there's potential for more of that, because take online retail spending, it's up sharply year to date, but the market is assuming that that acceleration in online retail sales is an acceleration in a structural trend, rather than the fact that everyone's been stuck at home because of COVID. And so if what we see is a vaccine announced and then people go back to shopping in offline stores, as indeed the latest retail data suggests is already starting to happen, then I think you could see people switching out of, say, some of those online retailers into some of the more beaten up sectors.
All right, Mike.
Thanks very much, Mike,
you're going to stick with us.
for
We got
joining
more.
us. Mike Bell, JP Morgan Asset Management. Yeah, we will get more. As Matt said, we'll get more from Mike Bell shortly. And one of the things we want to talk to him about is the earnings season. And Matt, we need to check in on what's going on with Unilever with that in mind, because Unilever shares are gaining as sales fall by less than expected in the second quarter, much less than had been expected. We also got some news on their planned disposals. We see the share price is up by more than 8% in London and in Amsterdam. We'll bring you our interview with the CEO, Alan Jope. This is Bloomberg.
I think what we've seen in the last quarter is the true strength of Unilever. Our breadth of our portfolio gives us good resilience. We've shown agility on how to respond to these unprecedented circumstances. And meanwhile, we've been working on the strategic future of the company. We're long past the stockpiling phase now in North America. And what we're seeing is big shifts from category to category. So things like hand hygiene, surface hygiene, growing very quickly. And I think a lot of our growth in North America has been driven by our in-home foods business as people eat meals at home rather than on the go. And that's likely to continue for quite some time. On the other hand, our business that supplies restaurants, of course, is struggling in the current circumstances.
I'm placing a new order to buy euro at 115.84. New order placed to buy euro, but I'll check again at what price. At 115 and lower. $837. Let's put this price. 115.837. Okay.
DAX. Earnings season is in full swing, and electric vehicle maker Tesla posted earnings as well. Posted a profit, in fact, even in the midst of the global pandemic. The positive quarterly earnings were the car company's fourth in a row, but Chief Executive Elon Musk still wants to grow the company, announcing it will build a new plant in Texas. For more on Tesla and on earnings, let's get over to Mike Bell. Mike, what do you think about, what is now a $300 billion company, Tesla? I saw a chart yesterday, I think from Dave Wilson in New York, that showed Tesla's market value not only eclipses that of other car makers, but the entire U.S. auto index and parts makers, and the entire European auto and parts makers index. So this is becoming, the size of Tesla is a phenomenon that seems disconnected to the business, even if you are looking at the future of what's possible.
Yeah, and without commenting specifically on Tesla, what I would just say is, we are looking through the market at the moment and trying to avoid overpaying for stocks where the PE multiple looks extremely stretched. And you see that in a variety of different growth stocks at the moment. What I fear is that what's going on at the moment is that you've got a combination of COVID causing beaten up stocks to be clearly somewhere that people are avoiding, and therefore that's forcing a lot of the money into stocks which are perceived as long-term structural gainers and winners, and creating this kind of irrational exuberance and stretched valuations in certain pockets of the market. So we think it's very important to avoid overpaying at the moment, given how stretched valuations are in some sectors and stocks.
And so what has impressed you then, Mike, when it comes to the earnings season, or has there been nothing that is impressed in the search for companies that have been beaten up but maybe have then impressed with their resilience? What has been your message so far from the earnings season?
Yeah, I mean, one area which has held up reasonably well has been some of the financials. They've clearly been taking credit provisioning. But when we look at the non-bank financials, so some of the sort of brokers, wealth managers, and asset management businesses, they strike us as reasonably valued businesses. They're not on crazy PE ratios, and they've clearly got exposure to an economic recovery if we get a vaccine and a pickup in the stock market. But also, if we were to see another leg downwards, they're businesses which aren't going to go bust. Right? So they've got that survivability, and they've also got the exposure to the upside without being on too stretched valuations. So those are the kind of businesses which we think look attractive at the moment.
Do you need a vaccine? Do we really need a vaccine? Because it strikes me that we don't really have a very good vaccine for the flu or many other viral issues. I can't imagine the optimism is as high as it looks in terms of market pricing. And Mike, I look at the reopening here in Germany of the economy. It seems to be doing fine. There's no vaccine, but we're also not.
New position, long position open on euro at 115.837. So I opened long on euro at 115.837.
And the clear difference, as you say, is that Germany's rebound in economic activity has come without a pickup in infections, whereas in the US, you've seen a rebound in economic activity, but unfortunately it's come with a pickup in infections, which is now unfortunately turning into a significant rise in the number of people in hospital. And with that, threatening that there may have to be further social distancing measures, either imposed or voluntarily imposed by people who are worried about the hospital system eventually filling up. So when I look around the world at the moment, I feel optimistic about the areas where you're seeing a recovery in activity without a pickup in infections, like parts of Europe and China, but more cautious on areas where you're seeing a pickup in activity, but it's coming with a rise in infections, like in the US.
Mike, thanks very much. Mike Bell, JP Morgan Asset Management Global Market Strategist. Mike will be continuing his conversation with us on Bloomberg Radio. Matt and I will be heading there at 9 a.m. UK time, so that's around 45 minutes from now. So we'll certainly be focusing on that. A lot of moving parts in the markets today. Really interesting earnings stories coming through, from advertising to food products. We will talk about some of these stories shortly. We'll also get into the chemical story, because the chemical company Covestro is confirming its guidance for the year, but says uncertainty surrounding the pandemic remains high. We'll speak to the CEO, Marcus Steilman. That conversation is coming up next. This is Bloomberg. Welcome back to the European Market Open. We are 19 minutes into a trading session that is broadly positive for European equity markets, up by 0.4%, lifted in most markets apart from the Spanish market this morning. The earnings story very much part of that. Let's get to that now with Covestro, because Covestro says its business was hit hard in the second quarter, but the chemicals company says it's already seeing recovery in demand for some of its products. The manufacturer is confirming the reduced guidance it's already issued, but says significant uncertainty still remains surrounding the impact of the pandemic. Joining us now, I'm pleased to say, for his first interview of the day is Marcus Steelman, who's the Covestro CEO. Marcus, very good to speak to you. So let me ask you about how things developed in the last quarter. Was the end of the quarter much better than the start? Give us the profile.
Yeah, Anna and Matt, very good morning to you, and good thank you for having me on the show, and good to talk to you again. So looking at the second quarter, I think two things were actually absolutely important for us. We very consistently managed the crisis, and we also took very active measures to also fight against the crisis. And that is what you then finally can see has led to the results of 125 million euro EBITDA for the second quarter, which was higher than the market expected. So what did we do? First and foremost, for us important was health and safety of our employees, so that we made sure that this is always guaranteed at any point in time. And that's also what is still and will be in the future on top of the agenda. Aside of that, we made sure that we did not let drop any of the customer orders. So we made sure that there was no interruptions in the supply chains. We made sure that we also adapted our production output very flexibly to market demands. We had a very strict focus on our cost development, and for sure we safeguarded our liquidity position. So all in all, that was then surrounded by April being the month that was hit the hardest by the pandemic. And since then we have seen sequential improvement in May as well as in June. And I can also say that that trend has actually continued in July already, as far as we can say months to date in the numbers. So that as of today, in terms of volumes, we are just slightly below previous year levels.
What kind of growth, Marcus, do you expect? And I wonder, across regions, because here in Europe, Middle East, Africa is your biggest region. If you look at EMEA, APAC, and then NAFTA in that order. But the growth that you get from Asia, at least over the last 3 years, run rate seems to be stronger than anywhere else. You have extensive experience. I believe you've even lived in China for a few years. Do you expect that to continue to be your growth leader?
Well, actually, I lived 8 years in China, and that's why I have some insights about the region and how the region is developing. And if you dive a little bit deeper, you can say that the economic wave actually has followed the pandemic wave, and Covestro is surfing this wave very well, I have to say. So what we see is that China came out very strong and first. And if you see the growth in Asia Pacific overall and look more in detail into it, you see that China in the second quarter has grown by 5% in terms of volume. That means the rest of the region actually has declined by more than 30%. So China is definitely the growth engine for the second quarter, and is followed by Europe and also North America in that context, as I said, with sequential improvements. So overall, I have to say that China is the growth driver, and I also expect, from all I can see, that China will continue to be one of the growth drivers of our business also in the future to come. And if you look at this, we are very well strategically positioned, because we have in all three regions assets that independently are able to serve the respective customer demands from the region towards the region. And that is one of the strategic advantages that Covestro has.
I've spoken to you in the past, Marcus, about the circular economy and about moves towards that. And we talk about environmental issues, and we ask guests sometimes about whether they've been put to one side, given the current fight has been all about coronavirus. Has this had an impact on the sort of environmental agenda at Covestro, on moves towards a circular economy?
I have to say, not a single bit. We have just confirmed and developed a new vision, which is we will be fully circular as Covestro. And what does that concretely mean? So we will move away from fossil fuel-based raw materials and ensure that we have renewable carbon sources for all the materials that we are manufacturing. Secondly, we make sure jointly with partners in the entire value chain, and that goes from suppliers to our direct customers, but also towards, for example, big retailers who are bringing our products to end consumers, to ensure that we really run all materials and everything that we bring to consumers, that we run it in circles and move away from a linear economy. Thirdly, we will make sure that all the energy we need, and we are a big energy consuming industry and big energy consuming company, will be replaced from fossil fuel-based energy sources towards renewable sources. And last but not least, we're also making sure that this is fully integrated in terms of getting a better competitive position. And all of this is still running at full steam despite the current massive crisis that we are seeing.
I want to ask about the automotive industry. Clearly a big part of your polycarbonates business and a big part of the German economy as well. What kind of recovery do you expect for automotive in Q3, Q4?
I believe that we will see a very different picture. So first and foremost, I think we will see some slight recovery, but we must not forget that we have across the globe very different inventory situations. For example, in Europe, as far as we have understood the market, we see that there's still a lot of finished goods. That means produced cars from the first and second quarter sitting on stock. That means whenever there's pickup in demand from end consumers, those cars still have to be sold off. The second topic is in China, I can clearly confirm that what is sold from us into the industry is real demand, because there's little to few cars really sitting on stock. So what consumers buy has to be produced. And in the US, we have a mixed picture. Plus, we're seeing a clear shift now and a clear pickup in demand, predominantly in the hybrid, but also electrical propulsion system and cars. And that is where Covestro is significantly well positioned. You just mentioned Tesla earlier in your reports, and we also collaborating with Tesla.
Okay, Marcus, thanks very much for joining us. Good to speak to you. Marcus Dahlmann, the Covestro CEO. And that takes us nicely on to what is coming up next on the program. Tesla's soared more than 500% in the past year and has had its fourth positive quarterly earnings. But Musk is still eyeing further expansion. More on the Tesla story next. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into Thursday's trading session. We are to the upside, but only by 0.3% here for European equity markets. US futures, though, point up by a similar margin and, in fact, higher on the Nasdaq futures. They're up by around 0.9%. Let's get to some of the individual stories that are moving markets right now. We've had numbers from a host of corporates, including Daimler. That stock up by 3.7% right now. Daimler targeting profit after weathering the worst of the virus crisis is one of the headlines coming through from the automaker. Let me also tell you what's going on with Publicis. The share price there, an incredible rise of up by 12.6%. It's been higher than that this morning. It's also taking others in the sector higher. WPP also goes higher. And it seems to be the US business and a shift in strategy there, some wins for Publicis in the US that seem to have pleased investors. And Unilever, also a strong story today. It was up as much as 8% earlier, now up by 6.8% in the Dutch listing. All of this really due to the sales numbers, which, yes, took a hit, but were not as badly hit as analysts had anticipated. The CEO of Unilever, Alan Jope, told Bloomberg's Anne-Marie Hordern how the company handled the coronavirus pandemic.
What we've seen in the last quarter is the true strength of Unilever. Our breadth of our portfolio gives us good resilience. We've shown agility on how to respond to these unprecedented circumstances. And meanwhile, we've been working on the strategic future of the company. We're long past the stockpiling phase now in North America. And what we're seeing is big shifts from category to category. So things like hand hygiene, surface hygiene, growing very quickly. And I think a lot of our growth in North America has been driven by our in-home foods business as people eat meals at home rather than on the go. And that's likely to continue for quite some time. On the other hand, our business that supplies restaurants, of course, is struggling in the current circumstances.
I think a lot of people were surprised in how well ice cream like Ben & Jerry's did in North America, given the fact that a lot of tourist concessions had to be shut down. Do you think ice cream and other sort of businesses that you supply to restaurants, are they going to recover in the second half as more cities begin to reopen?
You know, there's a number of consumer behavior changes that we're seeing through this pandemic. People cocooning at home as a safe space, people worrying about value. But one of the things we're observing is e-everything. So we're all shopping online, we're paying online, we're browsing online, we're consuming media online. And can you believe it? Our ice cream team have managed to pivot from selling out of home, on-the-go ice cream to take advantage of the boom in home deliveries. And so a lot of the growth that we've seen in ice cream is people enjoying ice cream at the end of a meal as part of a home delivery service. That's a trend that we expect to continue. And I also want to make the point that as we sit in Western Europe and our bubbles in North America, we must not lose sight of the fact that this disease is still ravaging through the global south. It's at full steam in Latin America, it's getting a grip in Africa, it's having a devastating impact in some parts of South Asia. So I think we just need to be conscious that people are suffering around the world.
Yeah, of course, it's a very good point, and a lot of humility you need to bring when you're discussing the impact on the changes of behavior. When you look at those changes of behavior, is there anything you could really harness to maybe create new brands for more stay-at-home meals? Is there anything you think this pandemic means you're going to either look at other brands you can potentially acquire? How does this change your portfolio going forward?
You know, one of the things that we've seen, Anne-Marie, is big brands, traditional brands, are doing very well indeed in the current circumstances. Now is a time when people are feeling insecure, and the trust that they have in big, well-known brands is of even greater importance. We will, of course, be continuing to look for opportunities to acquire. In fact, in this quarter, we completed the largest acquisition Unilever's done for quite some time, acquiring into healthy nutrition with the Horlicks and Boost brands that are mostly in South Asia. So we will continue to engage in the acquisition process, but at the moment, the real news is the strength of the well-trusted, big, familiar brands.
you also talked about your tea business in the latest report. You're actually keeping some of the tea empire in-house, but spinning off some others. And what other M&A do you think is potential this year, or is the industry? Is it even maybe too far-fetched to think the industry can really do more M&A in this kind of crisis environment?
I would say our position in M&A hasn't changed over the last 6 months. We're very disciplined on looking at strategy, price, and timing. And if good opportunities emerge, then we are certainly in a strong position with our very healthy balance sheet to take advantage of that. The other thing that we've been working on is in the last quarter, we've announced our intention to unify the company, simplify the legal structure of Unilever. And further down the road, that could give us opportunities to look at more transformational acquisition, though I want to stress there's nothing of that nature on the immediate radar.
And that was Unilever's CEO, Alan Jope, speaking to our very own Anne-Marie Bourdin. Now let's get the Bloomberg First Word News. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. China is vowing to retaliate for the U.S. ordering the closure of the U.S. consulate in Houston. It escalates tensions between Washington and Beijing, already under heavy strain. The editor of the Communist Party's Global Times newspaper tweeted the Chinese response will cause the U.S. real pain. The South China Morning Post reports China may close the U.S. consulate in Chengdu. Global cases have topped 15 million of the coronavirus. The US, Brazil, and India are the three worst-hit countries and account for nearly half of all confirmed infections and more than 40% of fatalities. Texas has reported its biggest daily increase in deaths, but pressure on hospitals seems to have leveled off in some major metro areas, including Houston. Italy is targeting 25 billion euros of extra spending to rescue the economy hit by the coronavirus pandemic. A senior official says the government has approved the plan, which now goes to Parliament. Bloomberg's been told the extra money will be used to help businesses and provide subsidies to local authorities. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thanks very much. Laura right there in London. Now, Tesla has managed to stay profitable even in the midst of the global pandemic. The positive quarterly earnings were the car company's fourth in a row, but Chief Executive Elon Musk said he still wants to grow the company, announcing Tesla will build a new plant in Texas. Joining us now is Amrendra Sinha, Quintet Private Bank Head of Direct Equities. Amrendra, what do you think about the growth prospect of Tesla and really the likelihood that it is added to the S&P 500?
Yeah, morning, Matt. We think the growth prospects of Tesla are really quite strong going ahead. It's still really just transitioning from a startup business with only 0.5 penetration really of EVs globally. We think there's a very long runway for growth. With the S&P, we think that it now qualifies with regards to all the boxes, and now we think the committee will probably let the company into the S&P probably within the next few months.
You think it's going to get into the S&P in the next few months? Amrendra, good morning. That is interesting. I suppose that plays into the valuation conversation, doesn't it? Because you don't have to be a cynic about the technology. You don't have to be a cynic about the move to EV to still think that Tesla looks overvalued. How do you weigh up enthusiasm for the underlying product, enthusiasm for the fact it doesn't have any marketing and all those other selling points, but still a concern about valuation?
Yeah, I guess the biggest sort of concern people have with Tesla is the valuation. And you know, it really does depend on if you believe we are transitioning towards an electric autonomous drivetrain for our cars. And if you do believe that, then Tesla's the leader and looks rather similar to Apple back in the day in the its position in the smartphone. At the time, there was very similar conversations going on around Apple when it entered the smartphone business, Nokia being dominant. Obviously, a decade later, we know what's happened. Very similar sort of arguments were made for Amazon as well a decade ago, as it was starting its build-out of online retail. We think a very similar sort of process is occurring with Tesla, and we think over the next decade, the valuation will work its way through as the revenues and profits come through.
Man, it just looks huge. I mean, Dave Wilson yesterday showed a chart. It was his chart of the day out of the Bloomberg offices in New York, where Tesla's valuation, I mean, not only is it worth more than Volkswagen and Toyota put together, but it's worth more than the entire U.S. auto industry index. That's the S&P 500 auto index in blue. We're showing a chart here. In yellow, you see the Stocks Europe 600 auto index. Tesla's worth even more than that. This includes parts makers. I mean, Amrendra, does it make sense that Tesla is worth that much?
I guess the easiest way to look at this is just do the software side. So the autonomy, if you believe it, you're selling to the consumer today a software for $8,000, probably increasing to $10,000 per car. No one has done a $10,000 consumer software business before. If they say make 1 million cars, which we think they may do in the next year or so, and you sell 50%, that's $5 billion of software profits. If you put that on a 30 times multiple, that's 150 billion. That's half the market cap of Tesla, but it's still growing at 50%. So really, that's not including the logistics potential of that, the energy business, and all the other potential innovations this business is going to deliver. So we think actually it's the potential of Tesla that's driving it, not its current earnings. You really do have to look forward.
Amrendra, what about governance concerns? Because we live in a world where many investors will filter stocks based on environmental issues, social issues. Obviously, the environment, Tesla would do quite nicely, but social and governance issues. Are there concerns around maybe the unpredictable nature of management here? What is the company doing to take that on?
Yeah, look, we think on an ESG perspective, which is a key sort of criteria for us, Quintet, we think it scores quite highly, actually. Obviously, the entire goal of the company is to transition to sustainable energy. But on the governance side, we think the company has made good progress in addressing some of the concerns here. The new chair lady at Tesla is doing a great job. And obviously, there's new people who've joined with Hero joining the board from Japan. And we think what is happening here, the governance side is improving. And I think shareholders and investors are sort of going to see further improvements on that side. So we think the governance has improved significantly, actually.
Amrendra, thank you very much. Amrendra Sina, Quintet Private Bank Head of Direct Equities, giving us his thoughts on Tesla after those numbers sent shares up after hours. Up next, going green. European Union governments approved the most ambitious climate change plan to date. We'll get behind the numbers. Just how green is Europe's plan? This is Bloomberg. Welcome back to the European Market Open, 45 minutes into Thursday's trading session, which is broadly positive, up around 0.3%. A little bit of weakness, though, at the periphery, the FTSE MIB and the IBEX, both down by 3 or 0.4%. Now, European Union governments approved the most ambitious climate change plan to date, with more than 500 billion euros of spending. EU leaders reached a deal on an unprecedented economic rescue plan and 7-year budget for the region worth 1.8 trillion euros. Almost a third of that is earmarked for climate action. Joining us now with more on the story, she's been digging beneath the numbers from Madrid, is Laura Mian, our reporter for Bloomberg Green. Laura, good to speak to you. So talk us through then the green credentials. What are they really of this EU spending plan?
That's right. So about a third of the money that European leaders agreed over the weekend and reached a deal in the late hours of Sunday, Monday morning. About a third of that is earmarked for green projects. So we still need to hear more from the EU leaders about the details of these plans. There are still no precise guidelines of how that money will be spent, but we know the intention is there to spend it on green projects. The European Union and European leaders, especially on the European Commissioner, Ursula von der Leyen, have been talking about the goal to reach climate neutrality in the European Union by 2050. And the intention is, the idea is that these funds will probably be spent on things like renewable energy, increasing the fleet of electric vehicles, new technologies such as hydrogen, etc. So there is still little detail on what these 500 billion euros will be spent in, but there are some things we know. During the negotiations, there was a rebalancing of the 750 billion euro rescue package for the coronavirus crisis. So there was a balancing of the ratio between grants and loans, and some climate programs have been affected by that. So there are already some analysts, some policy watchers that have been warning that maybe some climate policies could be affected. There's a Just Transition Fund that has gone from 40 billion to 10 billion has been cut. So some warnings there as well, because this Just Transition Fund was destined to help countries that would struggle a bit more to transition to a greener economy. So we're talking retraining workers, etc. But still, the size of the package is really big. We'll have to see on what it's spent. Another interesting thing about the deal reached by European leaders is the fact that even the money that falls outside of this 500 billion euros that will need to be spent in green policies, even all the other money European countries will have to commit to spend it in things that do no harm to the European Union's climate neutrality goal and to the ultimate goal of fighting climate change.
I think we're seeing, the president of the European Council, Charles Michel, was speaking, or he was speaking, and now Ursula von der Leyen is speaking, referring to how they're going to be spending this money and promising that they'll do a good job at it. How do the EU's green spending plans compare to those in other regions, to the rest of the world?
So the European Union plan and the amount of green spending in it makes it the world's greenest recovery fund so far. So again, not just in terms of the money, but of the percentage of any coronavirus recovery funds that will go into green policies. So we have seen nothing like that in any other region of the world. In the case of the US, for example, there have been no specific parts of the trillion package that the government that has been announced so far that will be spent on green policies. In the case of China, we have seen some measures that are aimed at, for example, increasing the amount of electric vehicle chargers on Chinese roads, which would increase the amount of, or the supply of infrastructure for electric vehicles. In China as well, some measures have been announced to increase renewable energy projects and so on. But at the same time, we have seen in China some other measures that would favor the installation of more coal plants and more fossil fuel installations as well. So overall, Bloomberg New Energy Finance is calculating that globally, before the European package was announced, 54 billion globally had been announced for green policies, compared to 670 billion announced in policies that would support carbon-intensive sectors.
Okay. Laura, really interesting stuff, really interesting comparisons there globally. Thanks so much for joining us. Laura Mian, our Bloomberg Green reporter in Madrid. Up next, do record savings slow growth and cap yields? We will put that question to Ven Ram, Bloomberg's Markets Live currency and rates strategist. He joins us next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 54 minutes into the trading day right now and looking at equity indexes that are up just about 0.5%. Not huge gains, but definitely significant green arrows here. Joining us to talk about today's markets is Ven Ram, Bloomberg's MLive currency and rates strategist. Ven, let's talk first about what's going on here in terms of headwinds or risks. You've got the U.S.-China tensions escalating, and yet markets are rallying. Why is that?
Morning, Matt. I think the markets have gotten used to kind of periodic eruptions in tensions between the U.S. and China, and nowhere is that more clear than in the currency markets, where if you look at the dollar, which has been bid for months on end now, since since the start of the first quarter, really. It now has an offer tone that suggests that the markets are kind of glossing over this, even though it's a risk, it's a definite risk that the relations could go downhill. The markets are not just fussed about it at the moment because they've seen all kinds of things happening on the U.S.-China front. As you know, we have seen tensions surrounding Hong Kong. We have seen tensions surrounding the trade deal. So the markets are thinking this is just another tantrum by the politicians, and the markets are therefore taking it in the stride.
Yes. Ven, good morning. Let me ask you the question of the day. You've been talking about it on the blog. Do record savings slow growth in cap yields? Because we've been looking at those charts that show savings going higher.
Morning, Anna. Yes, I definitely think that record savings slow growth because what's happening is very interesting because at the micro level, investors are depleting their savings. But if you look at the macroeconomic level, there's been such huge savings glut, and insofar as all that savings glut can find a productive use for the economy will benefit. But given the risk-averse scenario that the entrepreneurs are in, there is plenty of credit, there's plenty of savings chasing investments, but where are the opportune investments for entrepreneurs? That's not really clear with the shrinking demand.
All right, Ven, thanks so much for joining us. Ven Ram there, Bloomberg's MLive currency and rate strategist. That's it for the European Open. Anna and I are headed off to radio.
Beijing hits back. The consulate spat continues. There are reports that Xi Jinping may shut the U.S. consulate in Chengdu. Unilever's shares surge. Revenue comes in better than expected, fueled by customers buying hand sanitizer. We'll hear from the chief executive, Alan Jope. And Russia's sales take a hit from the pandemic, but the drug maker says that they're recovering. We'll speak to the chief executive, Sivran Schwan, in a few minutes. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the markets are still keeping an eye on what's happening, of course, in China. We're seeing a bit of movement when it comes to renminbi. If we bring the board up, so I can actually show you also what's going on in gold, you can see up some 0.2%, and then a lot of market participants looking at the earnings results and actually European stocks gaining 0.5%. Now, let's get straight to the Bloomberg First Word News here in London is Laura Wright. Hi, Laura.
Thanks, Francine. Global coronavirus cases have topped 15 million. The US, Brazil and India are the three worst hit countries and account for nearly half of all confirmed infections and more than 40% of fatalities. Texas has reported its biggest daily increase in deaths, but pressure on hospitals seems to have leveled off in some major metro areas, including Houston. Australia's budget deficit is set to hit a post-World War II record. The shortfall for the 12 months to next June will be around $132 billion US, more than double what it was for the last year. That's according to the government's economic and fiscal update released earlier this morning. It comes amid a surge in spending to mitigate the impact of the virus on the economy.
There's still some challenging times ahead, but we continue to make the decisions to provide support in the economy and to business and to protect jobs as appropriate. We do have to get back into a situation where viable businesses pay for the wages of their employees out of their own income rather than having to rely on taxpayer-funded support.
Italy is targeting 25 billion euros of extra spending to rescue the economy hit by the coronavirus pandemic. A senior official says the government has approved the plan, which now goes to Parliament. Bloomberg's been told the extra money will be used to help businesses and provide subsidies to local authorities. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura. Now, U.S.-China tensions escalate further. According to the South China Morning Post, China is moving to close the American consulate in Chengdu. Now, that comes after the U.S. forced the closure of its Houston consulate in one of the biggest threats to diplomatic ties in decades. Here's what some of our earlier guests had to say about the decision.
A breakdown in relationships with China is obviously not a good thing.
Whereas this is a surprising move against a Chinese consulate general in the United States, it certainly fits within the fabric of a structural deterioration in the relationship.
We have moved from a period of strategic cooperation with China to a period of significant, strategic competition. That's on every front.
It looks certainly at the moment as though China is in the process of losing, its most important external relationship, if it's not lost it already. We'll have to see what happens after the presidential elections in the United States in November.
I think the Trump administration has been, stronger with China than any other previous administration in many years, and I think that strength is, in certain cases, very important to be demonstrated.
If Pompeo thinks that this is going to change, quote, China's behavior, he is gravely mistaken. Statements like his and others very much weaken the hands of reformers in China.
We expect this decoupling to accelerate over coming years, regardless of which party takes control of the White House.
The number one priority we should have right now as Americans is making sure that our own house is in order. In other words, we keep pointing the finger at China, but really we've been naive in terms of how we've protected ourselves.
So that was the very latest that we spoke to about some of our guests, given what we saw over the last 24 hours. And frankly, this happened around this time yesterday, and it was pretty surprising to a lot of people. Now, today, the market shifts to a lot of earnings focus. So we heard from Unilever, we heard from Roche, we also heard from Daimler. Let's get the board up to check you about what exactly is going on in those markets. So you can see the FTSE actually gaining some 0.5%. Once again, the focus is actually on stocks climbing amid a pickup in earnings. The dollar slipping to its lowest level since January.
I'm placing an order to stop on euro at 115.857. So it's stop on profit for position I hold since this morning at 115.857.
We do nothing and we sit and we let the virus run around the world, we end up in a very dark place. Every business goes bust, and that's why we can't allow that to happen, and we should shut down the country. That was basically my argument, and I've made a pretty bullish case that had we taken a hard shutdown, we would have had a better outcome both economically and from a virus perspective. But the good news is we're going to get through this. There's going to be a vaccine. I think that's a reasonably high probability event. There are a number of meaningful candidates. We're on the cusp, hopefully. I heard, from a trusted colleague, he's on a board of a company with called a Chinese VIP, who's on the board of one of the state-owned enterprises in China. And he was recently vaccinated along with 40,000 other Chinese VIPs. And if the Chinese government is in fact vaccinating the 40,000 most important or high-profile citizens, they're clearly pretty far along on developing a safe, and effective vaccine. So I think,
Yeah, I mean, I was actually going to cite your letter to investors in March, where you said thousands of people have or will soon become severely sick, and at the end of that,
position closed on euro, £200 profit.
It did come for 150,000 people in a lot of ways. But Bill, can I ask you just a few questions about the environment now, very, very briefly, with brief answers, because we're almost out of time. Are you thinking about relations with China, and does that concern you?
Of course. Look, I think a globally connected world is a better world and a more, there's a bigger pie for all to share. And I think, a breakdown in relationships with China is obviously not a good thing. At the same time, I do think I respect the administration's, China has been pretty aggressive on issues of intellectual property, for example. I don't know the specific details of the issues concerning the Houston consulate, but you read in the press about document destruction, burning documents in the courtyard. The consulate, it doesn't look good for China. I have enormous respect for the Chinese. I think they've built an incredible country, economy, but like all of us, they're not perfect. And I think the Trump administration has been stronger with China than any other previous administration in many years, and I think that strength is in certain cases very important to be demonstrated.
Just because you have a history with the Hong Kong peg, I do want to ask you about reports that circulate from time to time that the administration is very concerned about, hammering the Hong Kong peg. Does something like that happen in our lifetimes, Bill?
I really have no idea.
Well, that was Bill Ackman. Now, joining us to talk more about what's going on in China's Derek Wallbank. Derek, thank you so much for joining us. Yesterday, you gave us a terrific briefing as it was all unfolding. What's exactly the latest today in the consulate span?
Well, Francine, China is still not quite saying what it's going to do in retaliation for the U.S. closing its consulate in Houston. There was a South China Morning Post report that China was readying to try and close the U.S. consulate in Chengdu. Now, that's the one that focuses on Tibetan affairs, among other things. There has also been a suggestion by Hu Zhijin of the Global Times that suggested that maybe China could limit the number of U.S. staff at the consulate in Hong Kong. China's Ministry of Foreign Affairs, their spokesman, was asked directly about this in a briefing that just concluded, gave no additional insight onto where that might be, only saying that it would be a proportional response.
There are reports that the English Premier League could also be in the firing line. What do we know about that?
Yes, that's right. There are suggestions that China may do with the English Premier League a similar thing that happened with the NBA and basketball. Now, a state broadcaster in China is not going to be showing the final weekend of the English Premier League that's coming up this weekend, the conclusion of the season, this much-watched event. This, according to a person familiar with the plans. we're going to have to see how this one pulls out, whether China just drops it entirely, whether it goes down from the main broadcaster to something much smaller that's like an obscure sports tier or similar to that. But the inclusion of sports in diplomacy is certainly a potential risk hazard, and British football, in addition to being a giant British cultural export, is also something that the Brits had used for diplomacy with Xi Jinping. There's a famous photo of Xi and then Prime Minister David Cameron at Manchester City taking a selfie with Sergio Aguero. So anything that touches, Britain's biggest sports franchise, it would certainly be quite a step indeed.
Derek, thanks so much. Derek Wellbank there with the very latest between the US and China. Now, coming up, despite a boost from coronavirus antibody tests, sales at Roche took a hit from the pandemic. We'll discuss that with the chief executive. He's Severin Schwan. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, sales at Roche took a hit from the coronavirus pandemic in the second quarter. That's despite a boost from sales of the Swiss drug giant's antibody test. Now, the company says lockdowns around the world slowed growth for some of its key medicines, but sales are now recovering. Well, joining us now is Severin Schwan. He is the Chief Executive Officer of Roche. Mr. Schwan, thank you for giving us a little bit of your busy schedule. First of all, I just want to talk about antibody testing. Do we have, is the world's testing capacity sufficient right now?
Demand for COVID-19 testing is clearly outstripping supply, and the bottleneck is not so much with antibody tests, it's actually with molecular tests which directly identify whether you are infected or not. demand is enormous, and therefore it is so important that tests are really allocated to those patients with signs and symptoms, patients who are most in need, risk patients, and it's also very important that we do everything, every one of us, to help reduce infection rates by keeping social distance, washing our hands, wearing masks where appropriately. Otherwise, it will be very, very difficult to keep up with demand.
So, Mr. Schwan, do you think in this way we would get a handle on COVID-19? I've heard also the school of thought that actually you have to test the public at large because what's really worrying people is the asymptomatic. Do you think it would be enough just to test people with symptoms? Because as you said, we need to have a careful use, I guess, of these tests because they're pretty scarce still.
That's exactly the case. As long as we have the scarcity of supply, and as long as the industry as a whole is not yet able to meet demand, I do believe we have to be very thoughtful about allocating the tests in the right way. And it is important that we allocate the tests to those patients who show signs and symptoms of the disease.
Can we sufficiently, test our capacity? Significantly increase the capacity to test in the next 3 to 4 months when there's also winter and fall coming in very much, the North Hemisphere where we could see a second wave?
Actually, Roche has quadrupled its production capacity over the last 4 months. I'm extremely proud of our organization, all the people who are working day and night, 24/7 over holidays, to get out as many molecular tests as possible. The industry as a whole has been ramping up production, but it will still take time until we can meet demand. So for the time being, I would strongly advise to allocate molecular tests to those patients who are most in need, and those are the risk patients, are patients with signs and symptoms.
Is Roche expecting a big second wave of the virus in Europe and Asia and elsewhere in the coming months?
That's very difficult to predict, and it will actually depend on all of us. Whether we keep distance, whether we keep washing our hands, whether we keep wearing masks where this is appropriate. That's really the only way to keep this virus under control until we'll see vaccines or antiviral medicines.
So what should policymakers be doing right now to be prepared for that? Is it, just making sure the population, stays as they have been? Is it getting the message across, or is it something more concrete to do with medicine?
It's a lot about reiterating the message so that we stay all vigilant, but it's also important to carefully track the disease, to see how it is evolving, where are the hotspots, and then quickly react and intervene accordingly. Part of that is also testing. Part of that is that we take very specific measures wherever we see infection rates going up. That is absolutely key before we have medicines or vaccines available.
When do you think we'll have vaccines? Will we have a treatment that works efficiently way before we have a vaccine that works?
There's a number of companies working on vaccines. There are some promising first results. We see that people who have been vaccinated develop so-called neutralizing antibodies. So there's hope that these kind of antibodies will actually keep the virus in check. However, having said that, it needs big clinical trials to show the safety and efficacy of such vaccines. So I personally believe that it will still take some time until these kind of vaccines will be broadly available for bigger parts of the population.
Do you think the antibodies, in people that have had COVID-19, the antibodies fade quite quickly. Is it different for vaccine? And if we don't know yet, when would we know?
There's a lot of research going on. I mean, we only know this virus for a couple of months, and there's evidence that if you have been infected, that you are immune at least for a certain period of time. And there is also some evidence which would suggest that even if your antibodies are decreasing again, that there's a certain memory function of your immune system, so that if you get reinfected a second time after having gone through a first infection already, that you will quickly respond, even if you don't have antibodies in your system anymore at this point. But again, there's a lot of research going on. We still need to better understand this virus, and as we will continue to learn, as the science continues to evolve, we will increasingly be in a position to keep this virus in check.
Mr. Schwan, looking at your report, you saw a 15% plunge in revenue in May. What happened specifically in May?
That was really at the height of the lockdown, when literally healthcare systems closed down except for COVID-19 related cases. So healthcare systems were focusing all their resources on COVID-19, and as a result of it, patients simply couldn't visit their doctor, couldn't go to the hospital. And of course, that meant that there was much less routine diagnostic testing, and there was also, a delay of treatments. The good news is that since June, the systems have found a new equilibrium, they have adapted, and as a consequence, now systems are also able again to treat patients with other severe diseases, and we have seen this recovery reflected in our numbers as well.
Thank you so much for joining us, Mr. Severin Schwan, the Chief Executive Officer there of Roche, with some interesting comments on antibodies and, of course, our fight against this pandemic. Now, coming up, despite the pandemic, some of Europe's biggest companies are surprising to the upside. We'll round up today's earnings updates next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, this is what the markets are looking at. There's a lot of earnings out in Europe, and then there will be a lot more out in the U.S. The focus is definitely on the spat between the U.S. and China. We are expecting the China consulate fight to go on, and we're expecting some sort of retaliation from the Chinese side. If you look at dollar, it's actually slipping to its lowest level since January. I'm also looking at gold advancing for a fifth day, and then the yuan strengthening offshore, treasuries actually edging up. Now, if you look at stocks, they're notching higher even as there are these further tensions between the world's largest economies. I think what they're looking at is really some of the numbers out of companies that aren't bad at all. Coming up, a conversation with Mark Hefele from UBS Wealth Management. That's next, and this is Bloomberg. Another day of risk-off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. China is vowing to retaliate for the U.S. ordering the closure of its consulate in Houston. It escalates tensions between Washington and Beijing, already under heavy strain. The editor of the Communist Party's Global Times newspaper tweeted the Chinese response will cause the U.S. real pain. The South China Morning Post reports China may close the U.S. consulate in Chengdu.
As far as closing additional embassies, it's always possible. You see what's going on. We thought there was a fire in the one that we did close, and everybody said there's a fire, and I guess they were burning documents or burning papers, and I wonder what that's all about.
Goldman Sachs chief David Solomon is calling for more spending to help revive the economy. He spoke on a webinar hosted by the Economic Club of New York. The comments coming as congressional leaders remain deadlocked on a new stimulus deal. But Solomon also warns that spending now will mean a bigger economic burden in the future, saying there's no free lunch.
Even though it's hard and it's expensive, we are better to blunt the economic impact now in the short term by spending more than to allow it to get worse and deal with the consequences of it being worse.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura. Now let's get straight to the markets and a busy day for earnings. Well, joining us now is Mark Haefele, Chief Investment Officer of Global Wealth Management at UBS. Mark, always a pleasure to speak to you, so thank you so much for coming on. When you look at markets and the way that equities have behaved and the rally that we've seen over the last couple of weeks, is there a mismatch between the fundamentals or are equities right to rally?
Well, so far the rally has been pretty narrow. We expect that the rally can broaden out and that we do see upside for stocks in the second half of the year. And that's based on several factors, including the sentiment that we see amongst our investors and business owners as we survey them. About half of them call themselves in wait-and-see mode. But there all is, as you've highlighted, more fiscal stimulus coming. We have very high consumer savings rates. And as large asset allocators, when we look across, there are very few alternatives to equities right now.
So where do you see those alternatives as bringing good value?
Well, I think that moving away from, say, some of the U.S. indices and looking more broadly at global equities is a good first step for many investors. We also like UK equities because we see them as a better value and also being more cyclical, being more cyclically leveraged as we get further economic improvement from here.
Mark, is there anything that feels like it's in a bubble, or because there's central bank support, even if things are in a bubble, we don't have to worry about it for now?
Well, calling bubbles is very difficult. I think that when you look at what's going on with some of the elements of the tech sector and the NASDAQ and these very long duration plays, given the action in the 10-year and concerns or hopes, depending on how you look at it, that the Federal Reserve may anchor the interest rate curve, that has given a lot of fuel to the long duration tech names, which also benefited from the stay-at-home trade. But some of that we think can reverse if we get better economic data continuing to come through.
Mark, when you look at some of the things around the world, I mean, how much more stimulus will we actually get? Is this the one thing that should, I guess, support some of the risk assets?
Well, I think this news in Europe has been very encouraging, perhaps even historic, and that kind of additional fiscal stimulus into the global economy matters. Now we'll see what happens in the United States. That there's some reason to believe that the Democrats came with $3 billion in a proposal, and the Republicans are at $1 trillion. Let's meet in the middle. I think that's a possibility. Near term, there's going to be some noise as this package gets negotiated, but we do have an election coming up in the United States, and both sides are incentivized to provide voters with something at a critical juncture as we come into the run-up for the election. So we do see more stimulus on the way, and that extra stimulus into markets typically does have the impact of raising the kinds of valuations that you can see.
When you look, Mark, at the composition, or a lot of economies ending lockdown and the gradual reopening, or in certain cases the reopening, are markets thinking that this is going to be a tap on, tap off in terms of lockdown, or is that where we could have a dislocation, that actually we go into back full lockdown and that takes the markets by surprise?
Well, it's very interesting. We surveyed our business owners, and more than half of them are concerned with weathering another lockdown. We really think that we've learned a lot about the virus and that policymakers have much better options than going back to these national lockdowns. We've learned a lot about how many people were in the society infected with this virus but asymptomatic. And that's important because now we understand better that it is not as infectious as we originally thought. And so we are seeing not a perfect, but some combination of mask wearing and social distancing, and also the fact that many people in some societies, in some cities, 20% of the population has already had the disease. That is having an impact to reduce hospitalization rate. And of course, as we know, hospitals are better protected now, have more capacity. So we think that the national lockdowns are very unlikely.
Mark, what do you do with gold right now?
Well, we like gold for a variety of reasons. First of all, we see reasons that the U.S. dollar can weaken with this stimulus and perhaps concerns coming into the election. And some investors will choose to move to gold as an option there. Secondly, in this low interest rate world where indeed there's negative real yields, that's an environment that can support gold as well.
Mark, when you look at regional disparities, so I know you talked a bit about the U.S. We also have this recovery fund in Europe. We have Asia, given what's happening with the U.S. and China. Do you break it down in regional performances as well? What looks attractive right now?
Well, the consumer discretionary in Asia looks very attractive to us, as well as some of the tech infrastructure in Asia, because China being the first in, their consumers are kind of the first out. With certainly we're seeing in our Investor Watch survey much more positive sentiment in Asia, or increased positive sentiment in Asia. And so that may lead to some of this pent-up consumer savings being unleashed in Asia first. And I think you're right to hit on tensions, U.S.-China tensions, as being a key theme of the second half of the year, because it is certainly going to be one of the election issues that we have to deal with. However, I think for the current administration, they've talked about continuing with the phase one trade deal. I don't think they want to pursue that in a way that meaningfully impacts the U.S. recovery at this point.
Mark, very quickly, we also have a question of the day, and this is being discussed in our live blog. And actually, we're trying to figure out whether record savings, slow growth, and cap yields. Do you worry about people saving more?
I think that as we begin to get a bit more clarity around virus rates peaking in some of these hotspots, and a better sense that large lockdowns are not going to continue, that should continue to unleash some of this pent-up savings.
Mark, thank you so much, as always, for making us smarter on the markets. Mark Haefler there, Chief Investment Officer of Global Wealth Management at UBS. Now, coming up, stockpiling success. Sales at consumer goods giants Unilever drop much less than expected. Our interview with the Chief Executive, Alan Jope, is next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Unilever shares are one of the biggest gainers in Europe's Stock 600 this morning. That's after the consumer goods giant beat estimates for a slump in second quarter sales. Well, earlier, the chief executive, Alan Jope, told our Anne-Marie Hordern how the company handled the coronavirus pandemic.
I think what we've seen in the last quarter is the true strength of Unilever. Our breadth of our portfolio gives us good resilience. We've shown agility on how to respond to these unprecedented circumstances. And meanwhile, we've been working on the strategic future of the company. We're long past the stockpiling phase now in North America. And what we're seeing is big shifts from category to category. So things like hand hygiene, surface hygiene, growing very quickly. And I think a lot of our growth in North America has been driven by our in-home foods business as people eat meals at home rather than on the go. And that's likely to continue for quite some time. On the other hand, our business that supplies restaurants, of course, is struggling in the current circumstances.
I think a lot of people were surprised in how well ice cream like Ben & Jerry's did in North America, given the fact that a lot of tourist concessions had to be shut down. Do you think ice cream and other sort of businesses that you supply to restaurants, are they going to recover in the second half as more cities begin to reopen?
You know, there's a number of consumer behavior changes that we're seeing through this pandemic. People cocooning at home as a safe space, people worrying about value. But one of the things we're observing is e-everything. So we're all shopping online, we're paying online, we're browsing online, we're consuming media online. And can you believe it? Our ice cream team have managed to pivot from selling out of home, on-the-go ice cream to take advantage of the boom in home deliveries. And so a lot of the growth that we've seen in ice cream is people enjoying ice cream at the end of a meal as part of a home delivery service. That's a trend that we expect to continue. And I also want to make the point that as we sit in Western Europe and our bubbles in North America, we must not lose sight of the fact that this disease is still ravaging through the global south. It's at full steam in Latin America, it's getting a grip in Africa, it's having a devastating impact in some parts of South Asia. So I think we just need to be conscious that people are suffering around the world.
Yeah, of course, that's a very good point, and a lot of humility you need to bring when you're discussing the impact on the changes of behavior. When you look at those changes of behavior, is there anything you could really harness to maybe create new brands for more stay-at-home meals? Is there anything you think this pandemic means you're going to either look at other brands you can potentially acquire? How does this change your portfolio going forward?
You know, one of the things that we've seen, Anne-Marie, is big brands, traditional brands, are doing very well indeed in the current circumstances. Now is a time when people are feeling insecure, and the trust that they have in big, well-known brands is of even greater importance. We will, of course, be continuing to look for opportunities to acquire. In fact, in this quarter, we completed the largest acquisition Unilever's done for quite some time, acquiring into healthy nutrition with the Horlicks and Boost brands that are mostly in South Asia. So we will continue to engage in the acquisition process, but at the moment, the real news is the strength of the well-trusted, big, familiar brands.
You also talked about your tea business in the latest report. You're actually keeping some of the tea empire in-house, but spinning off some others. And what other M&A do you think is potential this year? Or is the industry, is it even maybe too far-fetched to think the industry can really do more M&A in this kind of crisis environment?
I would say our position in M&A hasn't changed over the last 6 months. We're very disciplined on looking at strategy, price, and timing. And if good opportunities emerge, then we are certainly in a strong position with our very healthy balance sheet to take advantage of that. The other thing that we've been working on is in the last quarter, we've announced our intention to unify the company, simplify the legal structure of Unilever. And further down the road, that could give us opportunities to look at more transformational acquisition, though I want to stress there's nothing of that nature on the immediate radar.
Well, that was the Unilever Chief Executive Alan Jobe speaking to our Anne-Marie Hordern. Now, coming up, we'll continue the conversation on earnings season. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do. I certainly think that the environment for retail investing has really been pretty great over the last 10 years, frankly. I think that, the fees that retail has had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been, a key trend that has driven, I would say, the U.S. markets. But so I do think that's a longer-term trend. The fact that the commissions have gone to free certainly has driven more demand within the retail environment and retail investors coming into the markets this year.
Is it a free lunch? I mean, this is the key thing, and I go back, of course, to our relationship, Adina, with Arthur Levitt and his respect for the individual investor 30 years ago. Is it a free lunch? I mean, a Schwab says it's free. TD Ameritrade says it's free. You can trade NASDAQ shares, and it's free. Is it a free lunch?
Well, first of all, it really is free for retail, and I was at NASDAQ with Arthur Levitt during his tenure, and I do think that he really was on a mission to make it so we democratize access to the capital markets. And I think he went a long way in that regard. The online brokers have done an enormous amount to create services that really do benefit retail. And I do think that at the end of the day, they are getting a good experience. The spreads in our markets are extremely narrow, which means they are getting good executions, and they are now not having to pay commissions against to those retail brokers to gain access to the markets. So for them, it really is free access.
Adina, the spreads might be narrow. Are there sufficient protections against losses in companies, say, in China that are filing for IPOs here and trading without necessarily the same types of oversight that U.S. companies face? Yeah, and that's actually something that we have been in active dialogue with the SEC about. We encourage them to have a roundtable recently with the experts, whether the underwriters, the accounting firms, the lawyers, the SEC itself, and NASDAQ, and all the exchanges. We play a big role together in trying to make sure that we create the right disclosure regime for companies coming to the U.S., and including companies from China. There are some differences in terms of the disclosure obligations that that companies have coming from China, as well as some reduced oversight that the SEC has on the accounting firms that support these companies. So that's an area that we are focused on and trying to create positive change. I think the SEC is also focused on it, but that requires some diplomacy between the United States and China, and it's something we've really been encouraging them to really to focus on.
Adina, you've been incredibly proactive about all of this. Can you just walk us through what you have actually done specifically?
Yeah, so we have definitely had some concern that we want to make sure that we can play our role in addressing. So we've increased our oversight of the accounting firms that are being used by the Chinese companies. We normally really rely on the SEC for that, but at the same time, we do want to make sure that we have some oversight over the quality of the accounting firms that are being used. The second thing is we are requiring at least one member of the management team or a consultant to the management team to have U.S. public company experience. And the third thing is we have actually increased the public float requirement for companies that are listing from China. And all of those three things are things that we can achieve, but it's really a broader ecosystem issue that we're trying to make sure that that the government is working with the Chinese government to address.
I mean, the backdrop for this, folks, is really important here. It's the Alibaba and the uproar over Grand Cayman Islands island positioning, up to years ago, et cetera. But then, Adina, you've got the recent Wirecard train wreck in Germany as well. This is really important. Do you and your other markets, do you feel the SEC is abrogating its duty?
Well, I think that the SEC has an enormous amount of responsibility, and they take it extremely seriously in terms of the disclosure obligations that they place on companies that choose to list in the United States. I do think that they do an excellent job, frankly, of managing those disclosure obligations and reviewing the companies, being very proactive and writing back questions and comments to companies with their filings, and it is a huge part of their role.
Well, that was the NASDAQ Chief Executive, Adina Friedman. Now, it's been a busy day for earnings, so to run us through some of the numbers is our Danny Berger. Hi, Danny.
Hi, Francine. Well, I want to start with a company that our Anne-Marie Horton spoke to earlier. That's Unilever, gaining some 6%, 8% in today's trading, thanks to earnings that beat expectations. Their loss wasn't as extreme as we had thought, and that's in large part thanks to sales in North America of things like hand sanitizer and soap. Interestingly enough, because usually this is a weak point for them, the company also announcing that they're not going to sell their tea business in India and Indonesia, despite a lot of interest from private equity firms. Now, another big gainer today because of earnings is Daimler. That firm is up about 6%, trading at a February high. They now see a better environment. They think for 2020, they're actually going to post a profit. Yes, it will be less than last year, but previously they had seen a decline in operating profit for the entirety of the year. They're saying they're seeing the first signs of recovery. However, this outlook is assuming that the economy continues its upward path and that we also do not see another outbreak of the virus. Now, finally, the biggest gainer today is Publicis, 16% biggest gain since 2002, avoiding a cliff edge in the U.S. thanks to some new clients it got for its ad business. Of course, businesses are advertising less, so they've had to make cost cuts, including a hiring freeze in April. Francine?
Danny, thank you so much. Our Danny Berger there with the very latest on some of the earning figures. Now, this is what the markets are focusing on. There is a bit of a move when it comes to gold. There's also a bit of a move when it comes to Treasury and renminbi. You can see the U.S. 10-year yield at 0.59, and then crude in New York, 42.27. Now, Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York. We'll have more on the pandemic situation and stimulus, our conversation with the EU's budget commissioner. This is Bloomberg. another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Beijing hits back. The consulate spat continues. There are reports that Xi Jinping may shut the U.S. consulate in Chengdu. Stimulus breakthrough. The White House and the Republicans reach an agreement on spending measures, easing the way for Mitch McConnell to open up discussions with the Democrats. And Tesla shares higher in pre-market trading. The electric car maker finally meets the criteria to join the S&P 500 after reporting 12 months of profitability. Good morning, everyone. This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we have so many earnings both in the U.S. and Europe, so we tried to actually get down to that. And then we look, of course, at the U.S.-China spats and the flaring up that we saw yesterday. We're expecting retaliation from the U.S., and then we look at the markets.
We're going to go to China here in a moment. It's really, really front and center here. We'll get through it, folks. The mystery here of which consulates will be closed. In the United States, it's all about stimulus. What I would say, Francine, is look at the markets, and the markets are speaking this morning. You have further dollar weakness, and the surge in gold is now well out over 2 standard deviations. I think I can state it is an historic surge in gold.
Yeah, it certainly is, and we've been spending quite a lot of time on that, and we'll be spending a lot more time on gold. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the fight over the Chinese consulate in Houston shows that hardliners now have the upper hand in the Trump administration. President Trump has allowed a small group of advisors led by Secretary of State Michael Pompeo to push U.S. policy towards its most antagonistic in decades. U.S. officials say that China has a history of espionage and intellectual property theft. The Trump administration and Senate Republicans are considering a short-term extension of extra unemployment benefits. It's unlikely that the White House and lawmakers will agree on a broader stimulus deal before the benefits expire. Millions of Americans received the supplemental payments that were included in the last coronavirus package. Tesla is possibly paving the way for its soaring stock to join the S&P 500 index. The electric car maker reported positive earnings for the first quarter in a row. Still, that's not good enough for CEO Elon Musk. He thinks Tesla isn't growing fast enough. Shares have quadrupled since March. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, all of them important this morning. Equities continue the surge up, some of that earnings base. About a real nice pop there. I really can't convey enough how the VIX has come in, 24.08. We had a 23 handle on the VIX. This is a really, really changed equity market from a week ago, and certainly from 10 days ago. With that, the bond market sustains lower yields. And then you get to a dollar, which shows further dollar strength today. Looking at trade-weighted dollar, very interesting. We'll get to that during the show. And gold, really $2,000 an ounce is not out of the thinking given the gamma, the velocity, and rather the acceleration that we see right now. $18.81 an ounce on COMEX gold. Francine.
Tom, European stocks actually advancing, investors looking at the earnings pouring in, and today actually seemed to look past the latest tensions between Beijing and Washington. The dollar slipping for a fifth day, gold advancing. It's advanced quite significantly. And then I also want to show you yuan, renminbi strengthened offshore, and then treasuries pretty much steady. So investors taking stock of these escalating tensions between Beijing and Washington. According to the South China Morning Post, China is moving to close the American consulate in Chengdu. Now that threat comes after the U.S. forced the closure of its Houston consulate, and President Trump indicated more such moves may happen.
As far as closing additional embassies, it's always possible. You see what's going on. We thought there was a fire in the one that we did close, and everybody said there's a fire, and I guess they were burning documents or burning papers, and I wonder what that's all about.
Well, Bloomberg's Beijing Bureau Chief Sharon Chen now joins us from Chengdu. Sharon, if you look at the escalation, is there appetite from the Chinese side to escalate this significantly because they really feel wronged?
So I think the Chinese will have to respond. I don't think that they want to see a significant escalation, but, you know, like a lot of people in China and in the U.S. have said, the shutting down of the Houston consulate was really kind of an unprecedented escalation and something one of the worst actions that we've seen in many years. And, you know, China will most definitely respond. I mean, the question is how they choose to calibrate that response. The Chengdu consulate is one option. There's also a consulate in Wuhan where the virus, was first discovered. And then the editor-in-chief of the Global Times, a closely watched Communist Party tabloid, he wrote on Chinese social media suggesting that one option could be for the U.S., for China to make the U.S. cut its staff in Hong Kong.
Sharon, good morning. Tom Keene in New York. Does geography matter here? Chengdu is to the southwest. It is the stereotype is it's the location of the pandas and all that, and tourism, and of course the terrible earthquake where Condoleezza Rice visited years ago. Great. Does geography matter here between Wuhan and the river, Chengdu out in the west, and Hong Kong, of course, front and center?
The bigger factor probably is the size of the consulate. The biggest consulate that China has in terms of that the U.S. has in terms of processing visas, and actually in Guangzhou. And we visited the consulate here in Chengdu today, and people were telling us that really they haven't been processing visas anyway since the U.S. shut down those services during the pandemic. And the impact is really that that people won't be able to go. It really will affect travel between the two countries, kind of this diplomatic ties, and people being able to go there not just as tourists but to work and to study. And deciding on the size of the consulate that is forced to shut would really be probably the way that the Chinese calibrate that.
Sharon, the China-UK ties are also deteriorating. In fact, they're about to touch football, soccer if you're American. So the Chinese state TV has blacked out English soccer or the Premier League. Who at the moment supports China, or who are they closest to?
Well, yeah, I mean, I think, China obviously is fighting on multiple African countries. It's said today that it's giving a loan of $1 billion to Latin American countries to help them with acquiring a vaccine. And, it's trying to kind of build those relations with countries that the U.S. may not have focused on that much, or the U.S. and its allies may not have focused on that much.
Sharon, thank you so much. Our Beijing bureau chief in Chengdu, where she visited the consulate today, this is about 850 miles northwest of Hong Kong. Hong Kong much farther south than you normally think. We greatly appreciate that report. Coming up next, I'm thrilled to bring in George Saravelos, Deutsche Bank's global head of FX. He sees euro out to 120. He is weak dollar, but there's some real nuances there. For Global Wall Street, that will be must watch, must listen. George Saravelos next. Stay with us. This is Bloomberg Futures up 12.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now joining us with some of the smartest research notes around, actually, is George Saravelis, Deutsche Bank Global Head of FX Research. And George, both Tom and I just love reading the things when they come out. They're like targeted, they're clear, and they're always smart. You put out something, asking how high euro dollar can go. What exactly are the dynamics there?
Good morning, Francine, and thank you for your kind words. So I think we're undergoing a regime break for the dollar. These are broad dollar dynamics. Of course, we have had positive European news, which we can talk about. But I think what is going on here is the end of dollar supremacy. And it's really been unfolding since February, March. And it's across three dimensions. The first one is the end of yield supremacy. The dollar was a high yielder. Fed funds were very high. Now they're down to zero. So the yield advantage you have by buying European assets, American assets, is much less. And it's very cheap to hedge them. Secondly, the end of growth supremacy. This virus economy trade-off, I don't think, has proven that accurate. The US hasn't managed the virus as well as the rest of the world. So we expect more downside growth surprises from America compared to Europe and North Asia. And then also policy supremacy, I would argue. In the US now, we're having negotiations on a big fiscal cliff coming up in just a few days, while Europe has provided a very sizable fiscal backstop now for the next 2 or 3 years. So it's all these things falling into place, driving a weaker dollar, and I think a stronger euro. We think it can climb up to 120 for this year, and then even beyond that for the next one.
George, how optimistic are you that the EU Recovery Fund actually will lead to more European integration?
Well, Francine, I think it sets huge new precedents. It's a very important development. And of course, in the near term, the direct economic impact is not going to be there. It will take time to raise funds. It will take time to disperse them. But you have three important innovations. The first one is you have fiscal solidarity for the first time, and that will improve political stability, especially out of Italy. And people claim the amounts are quite small, but you cannot scale them by aggregate euro area GDP. You have to scale them by the countries to which this money is going to. And by that metric, the fiscal solidarity is large. The second thing is it creates a tax base. So for the first time, Europeans have agreed to tax across the EU to provide new powers to the European Commission to do that. And that's extremely important from a medium-term perspective. And then the last one is it creates a permanent structure. So yes, they're calling it temporary, but you have to remember this debt it won't be repaid until 2060. And that's a pretty permanent time horizon. And that time horizon can be extended. And if they don't want to repay the money back, they'll just keep rolling that deadline. and it essentially creates permanent debt issuance, which is also very important.
George, where does strong euro impinge on German exports? Just a general export tendency of Europe. Do you have a number on that?
I think it's a very important question, Tom. And what I would stress there is when the ECB looks at the euro and when economists look at the euro, they would look at the trade weighted. They would look at how is the euro doing versus the pound, the Swiss franc, the renminbi. And so far, because the move hasn't just been a euro move, it's been the dollar moving down across the board.
Right.
The trade-weighted appreciation actually hasn't been as big. But roughly speaking, I do think as we get to 120, the ECB will start to pay more attention, and potentially you could start getting questions around negative rates again. But it's a bit too early for that.
Yeah, I agree. It's a bit too early. I looked very carefully today at the Deutsche Bank trade-weighted index, George Saravelis. I think you invented it, or maybe Alan Ruskin did. I can't remember. Don't let Folkers Landau know that. But I looked at the trade-weighted index today, and dollar really hasn't broken down. It's been abrupt, but it's at the low end of a trade-weighted range. Are you presuming the trade-weighted U.S. dollar off your wonderful trade-weighted index will break down and signal weak dollar?
I think so. I think this is only the beginning of a weaker dollar move. And as we go into the summer months, I think we'll see a few things. Number one, data divergence. So the U.S. actually had better data over the last couple of months because it opened too early. But all our high-frequency indicators are now saying U.S. data should slow down while the rest of the world is accelerating. If you look at restaurant bookings, German restaurant attendance is now up year on year, and in the U.S. it's still down 70%, and it has stalled. So I think this data divergence between the U.S. and the rest of the world will continue, and there should be more policy uncertainty and risk premium into the dollar because of the U.S. election, this huge event risk coming up in November.
George, are we going to see inflation in the U.S. and in the EU because of some of these stimulus packages?
Francine, I still think that's very unlikely. We are seeing these big packages, but we have to remember they're in the context of a huge negative shock. And if we look at where output gaps will be, so the difference between GDP and potential, by the end of the year, we think the output gap will be just as big as what it was at the peak of the 2008 crisis. So unemployment rates will be very high. You also have a lot of fiscal cliffs coming up. The US we've talked about, and gradually that fiscal support, I think, will decline. The UK is the same thing. Furloughs coming to an end in October. So I definitely belong to the disinflation camp. I don't see inflation coming anytime soon. Very low real rates, keeping asset prices supported, and low volatility in general.
Well, let's continue with George Saravelis, and we do this looking at the DXY index here, a little bit weaker today. Gold up $17, $18.82 an ounce, some real dynamics there. Futures up 13. Coming up in the next hour, an important conversation with William Dudley, the former president of the New York Fed. His essays for Bloomberg Opinion have been the smartest out there. He's really put a lot of thought into the scenarios, the sets of outcomes within our financial system and this horrific pandemic. Bill Dudley in the 8 o'clock hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg surveillance from London, from New York. Really want to state here the importance of the equity markets. We're focused on dollar with George Cervelis. We'll get to that in a moment. Focused on a huge move in gold. I keep looking down, $18.82 an ounce, up $17. A 2 standard deviation surge in gold. Oh, yeah, the stock market really sustaining well here in this earnings season. Of course, we'll do a lot more on earnings today. I believe Intel later today as well. The S&P futures up 12. Dow futures up 126.983 there, and the VIX is stunning 23.98. That is a radical change from where we were a week ago. One of the great hopes and prayers here, folks, is to go to the Bloomberg and look for the presumed economic recovery of 2021. George, I want you to filter the work of Peter Hooper, of Matt Lazzetti, and the rest of your great economic team into foreign exchange on the just presumed recovery into November, December, into 2021. Do you buy it?
Well, it's great that you raised my colleague's work, Tom, because they just published a piece overnight where they're focusing on how much does the Fed need to do to be able to achieve its dual mandate. And the conclusion is they need to get Fed funds down to -5% at least. And if they can't do that, they need to do extreme amounts of QE. Around 12 trillion was that conclusion.
No, continue.
If you're looking at why gold is rallying, it's really this brave new world of extreme amounts of quantitative easing. And I think as we go into September, the risks are very much skewed towards a more aggressive Fed, which compresses yields, flattens the U.S. curve, and in turn, that would be an additional dollar negative dynamic beyond some of those we already talked about.
Okay, George, this is beautifully explained. And folks, what this comes down to is a statistic Deutsche Bank came up with, which how much oomph is going to be needed. And George, I want to bring that back to Europe and all the, I get it was a big moment over the weekend, but it's a drop in the bucket compared to the stimulus that will be required if we don't get a recovery.
So I think you're right that the aggregate amount of the recovery fund that was agreed was fairly small if you look at it as a proportion of GDP. But what we have to do is we have to look at it as a proportion of the GDP of the countries receiving the support. And if you do that, because the support is concentrated to a third of the economy, you essentially have to triple it. And there you end up with fiscal transfers in the order of magnitude of 3%. For some of the bigger countries, for some of the smaller countries, such as Greece or Eastern Europe, we'd be talking about 10% of GDP. So these are sizable amounts. Is it enough to create inflation? I don't think so. But is it enough to stabilize the politics in Italy, reduce Euroscepticism? I think the signaling power there is extremely important. And in turn, that can be quite supportive for investor confidence and inflows into Europe, which we're starting to see again.
George, what do you do with renminbi right now? So we saw, the flaring up because of the consulate in Houston. There could be a closure of a U.S. consulate in China. Does it move on the back of it?
So it's interesting because the U.S.-China tension is dominating the headlines. But if you look at the market, it doesn't seem to care. Dollar China is having very small moves. Equity markets aren't moving. And I think what we're seeing at the moment is a war of words. But the market has high skepticism as to whether this will escalate. And that skepticism is probably correct because the incentives, I don't believe, are aligned for huge economic disruption into the U.S. election. So verbal tension and escalation, yes. Actual economic escalation with large impacts on markets, unlikely into the U.S. election.
George, thank you so much. As always, George Servelis there of Deutsche Bank. Now, coming up next, Anthony Gardner, the former U.S. ambassador to the EU. We'll talk about foreign policy. We'll talk about the spat between the U.S. and Europe. We've been looking at gold. We've been looking at gold with Tom. We've also been looking at some of the economic toll from the virus. Now, this is what the markets are telling us. If you look at European stocks and U.S. equity futures, they're up. Investors monitoring earnings pouring from all sides. They're looking past the tensions between Beijing and Washington. The dollar actually slipping for a fifth session. And I know Tom wants to talk about gold. It's advancing for a fifth day. And then we were just asking George Servelis about yuan. So renminbi strengthening, offshore treasuries pretty much steady. I've heard a couple of research notes from some banks saying that actually when you look at the asset classes, because we've had quite a lot of news, but the stimulus from central banks mean that they could actually be range bound a lot of these markets. So we'll explore that shortly. This is Bloomberg.
Europe does, as you say, catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Breakdown in relationships with China is obviously not a good thing.
Whereas this is a surprising move against a Chinese consulate general in the United States, it certainly fits within the fabric of a structural deterioration in the relationship.
We have moved from a period of strategic cooperation with China to a period of significant, strategic competition. That's on every front.
It looks certainly at the moment as though China is in the process of losing, its most important external relationship, if it's not lost it already. We'll have to see what happens after the presidential elections in the United States in November.
I think the Trump administration has been, stronger with China than any other previous administration in many years, and I think that strength is, in certain cases, very important to be demonstrated.
If Pompeo thinks that this is going to change, quote, China's behavior, he is gravely mistaken. Statements like his and others very much weaken the hands of reformers in China.
We expect this decoupling to accelerate over coming years, regardless of which party takes control of the White House.
The number one priority we should have right now as Americans is making sure that our own house is in order. In other words, we keep pointing the finger at China, but really we've been naive in terms of how we've protected ourselves.
Now, some interesting voices in this interesting summer of 2020. And of course, of note this morning, gold surging. We see the U.S. dollar still weaker, futures up 13. Right now, a voice we've been so advantaged to speak to at Queen Victoria Street in times long ago and normal. And that is Anthony Gardner. To say he is a former U.S. ambassador to the European Union barely describes his competency in diplomacy, his education towards a foreign policy for America. We're thrilled the ambassador could join us this morning. Ambassador, I've got a really dumb question, which is incredibly rude, and Francine will ask you a polite question. Do we just assume that every country's consulates have spies in them? Not China, not the U.S., but is it just understood that any consulate out there in the world has quote-unquote spies?
Well, not all, but, in the old days of the Soviet Union, we certainly believed that, and it was correct to believe it. In the case of some other countries, I think it would be certainly prudent and normal to assume that, but not in the case of every country, no.
Okay, thank you so much for that. Let me try to ask a more polite question right now. Which consulate would we expect would go? Does China go with a regional consulate to take out, or do they really affect us with the very large presence that we have in Hong Kong?
Hard to say, obviously. I suspect that they will play tit for tat, meaning that they will take out a regional presence of the United States and not to escalate. That's what they seem to have done in the past, so I think that's what they would do.
How bad will the tensions, Ambassador, between the U.S. and China escalate from now? I mean, if it's, one for one, are we almost over the worst as soon as we know the retaliation from China?
Well, there's a lot more that can be done in terms of restricting Chinese access to the U.S. market. I hope that's not where we're going. But things are moving so quickly. Just look at Europe. I'm in London. I've lived here now for more than 20 years. The shift in the UK has been absolutely tremendous. Think back on the days of David Cameron, the Prime Minister, and the Chancellor of the Exchequer, George Osborne, when they were rolling out the red carpet. And look where we are today. Complete shift. Now, it hasn't quite happened in the rest of Europe yet, but there is a growing skepticism in continental Europe as well about China, not just due to Hong Kong and Xinjiang and other issues, but there is a significant movement. And the last thing I would say here is there is an opportunity now, which there hasn't been for a very long time, for the United States and Europe to actually work closely together on China, particularly in trade. It hasn't happened under this president, but I really hope we now do it, especially if Joe Biden wins.
What would that actually look like, working together on what?
Trade is a good example. So this administration, the Trump administration, has concluded, I think incorrectly, that the EU it doesn't have leverage with regard to changing Chinese trade practices, and that's for a whole host of reasons. I think that's mistaken. The EU isn't a superpower except in a couple of ways: on standard setting, and certainly as a trade power. And if the United States and the EU were actually sit down together and jointly put pressure on the Chinese to change their behavior, which we know has been abusive for many years, and to change the rule book in the WTO, which hasn't been changed for 25 years, I think we would get somewhere.
On the European Union and on your commitment there for America over the last decades, Ambassador, it was stark to me, given the weekend's activities, that it was odd that Britain wasn't there. Were you taken by the fact that the United Kingdom was not part of the festivities of that 4-day marathon session?
Well, no, because these are decisions that are being taken, post-January 1. So to all effective purposes, the UK is out. They're still a member until January 1st. But no, it wouldn't have been appropriate for them to be there. These are decisions that are going to be stretching into the future for the 7-year, what they call multi-annual financial framework, the budget. So no, I wasn't surprised.
Give us an update, please, on the new austerity. There's a great debate about percent of fiscal stimulus of GDP, whether it's in Europe, whether it's in the United States. Give us an update on the austerity we're trying to avoid now. Are we succeeding?
Well, I think if you're referring to what they decided over the weekend, I think this is a big step forward. So it's actually opposite of austerity. It's more stimulus in a way that we haven't seen from the EU in a long time. It's a significant step forward for many reasons, but particularly that the EU will now be issuing significant debt in euros and will be one of the biggest issuers of debt in Europe. And much of it will be transferred, a word that the frugal four hate, but that's basically what's going on, transferred to the worst affected countries, including Italy and Spain. So this is the Rubicon that's been crossed to some extent, and that the EU will now have its own resources. This is EU jargon for more taxation powers. It'll start, modestly, tax on plastics and so forth, but it will grow. So now we have, significant EU budget increased more than the trillion over the 7 years it was initially forecasted. So yeah, it's not austerity; it's further stimulus.
You have a new book out, Ambassador, called Stars with Stripes: The Essential Partnership Between the EU and the United States. If the United States needs to speak to one person in Europe, who do they call? It used to be, the Germans. Is it still the Germans? I mean, it used to be the UK, actually. Who is it now?
Well, that's a really interesting question. So, indeed, so when I was ambassador under Obama, the UK was really our privileged partner in terms of understanding what was going on in the EU, and frankly, helping to have the UK serve in a way as a megaphone for U.S. interests, because we were so aligned. That's no longer going to be the case after January 1st. So who do we go to? You're right. It'll be Germany, right? Not only because of its economic power, but its political clout, which will continue post-Merkel. She's going to step down soon. There is no other country in the 27 that ticks all those boxes, economic clout and ability to deliver. So it will be Berlin.
All right, Ambassador Anthony Gardner, thank you so much, a former U.S. ambassador to the EU there, and also a newly minted author with a book out in April. Now, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, the world has now gone over 15 million coronavirus cases. The US, Brazil and India account for nearly half of all infections. Texas reported 197 deaths, the most ever in one day. And in Florida, Governor Ron DeSantis says schools may delay reopening if they need time to protect against the risk of the virus. In the UK, a panel of lawmakers say that Boris Johnson's government had no economic plan for the pandemic. According to the House of Commons Public Accounts Committee, the economic response to the coronavirus was, quote, rushed and reactive. That's despite it being identified as a top risk for years. The fight over the Chinese consulate in Houston shows that hardliners now have the upper hand in the Trump administration. President Trump has allowed a small group of advisors led by Secretary of State Michael Pompeo to push U.S. policy towards its most antagonistic in decades. U.S. officials say that China has a history of espionage and intellectual property theft. President Trump mocked Joe Biden for holding virtual fundraisers from his basement, but the Democratic candidate is laughing all the way to the bank. Biden's big donor committee took in more than $86 million in the second quarter. Meanwhile, the president took in less than a third of that from his high-dollar donors, just $27 million. he had declined to appear on live stream events. He held his first one Tuesday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Bill Dudley with us here later today as well in the 10 o'clock hour. Narayana Kocherlakota, the mathematician, the economist, of course, the former head of the Minneapolis Fed, now at Rochester. Narayana Kocherlakota in the 10 o'clock hour. Stay with us with futures nicely up 13. This is Bloomberg.
It's not exactly what we would have wanted, but we're trying to, as much as we can, take precautions in order to make sure that we stay safe and that we're not, endangering anybody here. We want to make sure that we got COVID tests before we left the state of Florida. I'm honestly happy to be out of the state of Florida because I feel like Florida is just starting to spike. It's becoming its epicenter, which is definitely somewhere where I don't want to be. So I'm happy that we got the test, we cleared negative, and then we were just out of there.
Inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. It is about trust in business. There's a bid, there's an ask, and there's a trust that the transaction will get done. And then there's the ultimate trust, which is trust me and I'll raise some money. It's a SPAC, SPAC. It is a blank check company as well. William Ackman, the acclaimed Pershing Square Capital founder and CEO, is out raising money on the trust of a SPAC. Here he is with Vonnie Quinn.
This is a company that has $5 billion of capital that's now listed on the New York Stock Exchange, and we've designed the most investor-friendly structure in the history of SPACs without any form of compensation for the people doing the work, which really aligns our interests with our shareholders. And really happy with the reception we got during the roadshow process, and we put together, I think, one of the greatest collections of investors in the world to partner with us in what we're trying to do, which is to buy a minority interest in a very high-quality growth company that we're going to take public in an IPO. There's some other bells and whistles and things we've done to design a structure that is both investor-friendly to shareholders, but also merger-friendly to our potential partner. And that, I think, will enable us to make a deal that's good for both parties.
So let's move to the targets, Bill. First of all, do you have time to target? We know already that it's 2 years plus. You can add to that, but I imagine that you are using this time where the pandemic has maybe given you more of a discount on certain assets potentially to do your due diligence now that you can very quickly and get to some kind of target. So time to target, and then what kinds of areas are you targeting? We know that you've given a list of 4 sort of elements that you really want to see and that you're looking at. Can you give us any more details?
Absolutely. So, we think the target universe is probably 150 companies total, $10 billion plus private companies. There are more that we're not including. We're not including in that subsidiaries of large corporations. We're not including some employee-owned businesses in that list. But the list is broader than 150. We think the top third will meet our quality thresholds. We're looking for a simple, predictable, free cash flow generative company with very high barriers to entry, with minimal exposure to what we call risks. Extrinsic risk we can't control. We're looking for the super durable, great growth business that we can own for the next decade. That's kind of the target. The list is a list that we have in mind. There may be others we're not aware of. We welcome the phone call. But we're going to comb through that list. Stick with me, Vonnie, if you will, please. We're going to look at every deal over the next, we're going to see every deal over the next 6 months. I mean, what's interesting about this transaction is every investment banker around the globe is aware that we've just raised the largest blank check company in the world. We've got $5 billion of capital that we're looking forward to committing to buy a minority common stock interest in a company. It's the only such pool in the world. I refer to it in a way as its own unicorn. And basically, we're in a unicorn mating dance, and we want to, marry a very attractive unicorn on the other side that meets our characteristics. And we've designed ourselves to be a really attractive partner. And that's what we're going to do. And, in terms of specific companies, I'd rather not name specific companies. Go ahead.
Some names are already out there, and I don't think they meet all your criteria. So, for example, you say, a company that's not exposed to extrinsic risks. Would that take Airbnb out of the equation?
What I mean to say is every business is exposed to extrinsic risks, but if the extrinsic risk is one that is catastrophic, so for example, if you're an energy company and the price of oil goes down to 20 and you're bankrupt, that's not for us. Every bit, we own Hilton today. It's clearly exposed to pandemic risk, but it's a business that survives through a crisis like this, becomes a more dominant business after a crisis like this. We would certainly take a look at a company like Airbnb. I've always admired the business. I've admired its economic characteristics. I know many Airbnb, I have a friend who makes a large amount of her income by renting out the ground floor for Brownstone, has had amazing experience with the company. Certainly a business we would look at, very attractive economic characteristics. We don't require that a company today is cash flow positive on an overall basis. We just require it has extremely economic, attractive characteristics, and that we can predict with a pretty high degree of confidence how those cash flows will grow over the long term. And that's the kind of business that we're looking at.
Bill Ackman there from Pershing Square speaking to our Vonnie Quinn. Now, up next, we talk COVID-19 and the pandemic. Jennifer Rowe, UCL Principal Research Fellows, joins us. This is Bloomberg.
things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg Business Flash. Microsoft comes up short. The company failed to meet lofty expectations for 49% growth in its Azure cloud computing business. Still, Microsoft's overall sales beat estimates. Demand for subscription software remains strong. Investors have been bidding up tech stocks, hoping the pandemic would have benefits for their businesses. SoftBank approached Apple to see if it would be interested in bidding for chip design firm ARM. Bloomberg's learned the two had discussions, but Apple isn't planning to pursue a bid. ARM is seen as a poor fit with Apple's hardware-focused business model. And Roche says sales took a hit from the pandemic in the second quarter. Still, the Swiss drug makers say they are recovering, and it's confirming its outlook for the year. Roche rolled out some of the earliest and most accurate tests for the coronavirus. And that's Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. Now, reported cases of COVID-19 have now topped 15 million around the world. The three worst-hit countries, the U.S., Brazil, and India, account for nearly half of all confirmed cases and of more than 40% of fatalities. Well, joining us now is Jennifer Rohn, UCL Principal Research Fellow. Thank you so much, Professor Rohn, for joining us. We also spoke to the Roche chief executive earlier on, and he was basically saying that we have to be careful about the use of coronavirus tests because they're pretty scarce. I mean, are we testing too much in certain countries, or are we not testing enough? How do you get that balance?
I mean, in an ideal world, everybody would have all the testing capacity that they need, and the more testing, the better. But if we have shortages of things like reagents and apparatus that we need to process a test, you're going to have to prioritize. And it's really not an easy decision. It's not necessarily a scientific decision. It's a governmental decision.
What is the ideal situation, though? If you're a government, what are you thinking right now?
I opened position at British pound. The price I opened on 127.247. So position opened at 127.247. Long position.
Money into buying doses, hedging their bets, trying to make sure they have something. We don't know if they're going to work. So the safest approach is to assume that they won't work.
Jennifer, good morning. Tom Keene in New York. I want to go back to your original work in cell biology with your interest in virology and something called apoptosis, which basically I believe is cell death. I'm, of course, speaking as an amateur. And I want you to bring it over to this virus and young people. They're not going to die. I believe that's the generalization. But what happens to their cell biology while they're sick and after they're sick?
Tom, I'm afraid we really don't know. It's not something that we've been able to study much yet because there aren't that many cases of younger people who succumb to this virus. The viruses have an amazing array of weapons at their disposal. Also, we have a very strong immune response that can sometimes backfire and cause problems for our own body. So there simply haven't been enough studies long term because the virus has only been around since January. Yes, cell death is a serious issue, but I think more problem here is the immune response, the overreaction that our bodies are having to this infection.
Okay, what is the overreaction effect, again, on younger people? I would state as a generalization, in America, there's a feeling, okay, the young kids get the virus, whatever that age number is, I'll let you tell us. They get the virus and they get sick, but so what? They get better. Do they?
Well, there have been a few fatalities, and some children get a very rare sort of toxic, sort of like an over-inflammation type of disease that can put them in the hospital. But yes, they don't tend to get very ill. That could be, as you suggest, that their immune systems are not yet mature, but we really don't know.
Do we know if they can still pass it on, Jennifer? There's also reports, and again, there's so much conflicting information, but certainly in the UK, the schools reopened, and there was an understanding that actually it was more difficult for kids to transmit, at least, the really young kids, to transmit the disease.
And the bottom line is the more sick you are, the more virus you're going to shed. So by definition, anyone who's very ill or ill has any sort of symptom whatsoever is more likely to spread virus. Given that kids are less likely to suffer from effects of the virus, it's less likely they're going to have a viral load high enough to spread. Having said that, there is evidence that asymptomatic people can spread, and very good evidence. So again, I wouldn't rule this out, and there are more studies are needed. But I don't think kids are necessarily safe, and I think it's right that the schools are taking social distancing measures to keep that under control.
Well, somehow I think that'll be a theme for us, Dr. Rohn, as we move into August as well. Jennifer Rohn with UCL in London, a principal research fellow, and I just love that we've been doing this, folks, trying to bring you experts in medicine and in virology during this pandemic. Coming up at the next hour, it's always a joy to speak to Marvin Lowe. He's with State Street, but he has a really twisted, interesting view on global market strategy. That would help with equities to the moon, the VIX back to 23.96, and gold, 1882 the ounce. Marvin Lowe, the next hour. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly.
Stop on profit for British pound at 127.267. I'm placing a stop on profit at 127.267.
This morning, the surge in gold, it continues, and with it, persistent dollar weakness as hope of economic recovery. It's extended out and well into 2021. What will the Republican Party look like after the president? Wait, what will the GOP look like the first week of August? It is red state, hand-to-hand combat on the stimulus. And after Houston, guess the American consulate to close. Speculation abounds from Wuhan west to Chengdu and then 845 miles southeast to Hong Kong. Good morning, everyone. This is Bloomberg Surveillance from our world headquarters in New York at our world headquarters in London, Queen Victoria Street. Francine Lacroix is, well, Francine, it's a really, one of our staff said it's a nudgy news day, and it's sort of nudgy. It's almost to August. Is Europe, like every year, going to shut down, or is this year different?
I think this year is different, Tom, because a lot of people are working from home, so that the time extends and people will continue working on holiday. I do think, Tom, when you look at the markets, they're probably a little bit range bound, and that's where the nudginess comes from. Because actually, in terms of news, we do have quite a lot of news. You have earnings in Europe, and that gives us a good insight into what companies are predicting. And of course, you have the spat between the U.S. and China, which is very significant, but it's not really translating into concrete market movements.
We'll talk about China here in a moment. Of course, the news flow there, Ritika will have it in a bit. Earnings today and airlines front and center. We're looking for Southwest to give us some love here in the 6 o'clock hour. Right now, with our first word news in New York City, here's Ritika Gupta.
Morning, Tom. Francine. China may retaliate for the closing of its consulate in Houston by targeting the U.S. consulate in Hong Kong. That's according to the editor of the Chinese Communist Party newspaper, Global Times. He writes that the U.S. has over 1,000 staffers there, and that means it's obviously a spy center. The editor's comments have frequently been a tip-off to what the government does. The Trump administration and Senate Republicans are considering a short-term extension of extra unemployment benefits. It's unlikely that the White House and lawmakers will agree on a broader stimulus deal before the benefits expire. Millions of Americans received the supplemental payments that were included in the last coronavirus rescue package. And President Trump is now expanding a federal law enforcement operation to Chicago and Albuquerque, New Mexico. That sets up a showdown with state and local Democratic leaders who've denounced the presence of federal agents in Portland, Oregon. The president says his goal is combating violent crime. The move is seen as an appeal to his conservative base. British Prime Minister Boris Johnson is trying to head off growing support for Scottish independence. He'll stress the value of the United Kingdom in a visit to Scotland today. Tensions have been growing between the governments in London and Edinburgh. Issues include the coronavirus pandemic and calls by the Scottish National Party to hold another independence referendum. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Interesting. Equities, bonds, currencies, commodities, each of them with a story today. Equity surge up 16, Dow futures up 132, and the VIX a really stunning 23.85, showing the quiescence in the market. Bonds, okay, they're churning, but nevertheless persistent low yields. And then gold surging out. We're on the 2,000-ounce watch, $18.83 an ounce, up $18. Of course, silver with its own story as well. And the dollar, I'll let Francine talk to the dollar after our nice briefing from George Saravellos. Francine?
Yeah, Tom, the dollar is actually slipping for a fifth session. European stocks, U.S. equity futures, as you're saying, are up. Investors monitoring earnings pouring in. They're looking past the tensions between the U.S. and China. Gold up for a fifth day. Yuan strengthening offshore, and treasuries pretty much steady, Tom.
Off the presidential press conference, Francine, of the other day, I believe it was Tuesday now. I believe today's Thursday. Maybe it's a different President Trump. Here he is on Houston and the consulates.
As far as closing additional embassies, it's always possible. You see what's going on. We thought there was a fire in the one that we did close, and everybody said there's a fire, and I guess they were burning documents or burning papers, and I wonder what that's all about.
This story advances, of course. The sequence that I saw yesterday was a little bit of Reuters speculation and then a sharp Bloomberg story out of China, which really showed that Wuhan was in some kind of consideration. And then the speculation on Chengdu to the southwest. Our bureau chief in Beijing, Ms. Chen, is there right now. And then over to Hong Kong with a very large consulate. What will they do there? Writing this herd of speculation is Rosalind Matheson. She's executive editor for speculation for Bloomberg, and we welcome her today. She's our international government editor. Rosalind, I make a joke about it, but it really is all speculation, isn't it?
It is indeed, because there are essentially 5 consulates the US has in China, aside from the big embassy in Beijing, and then you've got Hong Kong as well. So it's sort of like pick one of these and see which one would hurt the most. But the reality is that China has to consider a proportional response to Houston, because while Xi Jinping can't let this one lie, he equally won't want to kind of escalate. So you need a response that sort of mirrors that action, and they'll be considering that carefully, because there are pros and cons, for example, in all of them, including Wuhan, and the nuclear option obviously would be to shut the consulate in Hong Kong.
But I mean, when do we find out what exactly is President Xi's game right now, Ross?
Well, right now they're confining themselves to rhetoric. They're saying the US needs to think very carefully about where the relationship is heading, warning that this, of course, is bleeding into a bunch of other things and could continue to bleed into a bunch of other things, including trade and so on. Obviously, with both their economies very weak right now, neither side would want that to potentially happen. But there's no indication of how quickly they're going to respond. We sort of see the state media in China channeling a bit of stuff, perhaps, to help point us in the right direction.
Position closed on British pound. I have 200 pounds profit. Position closed at 127.267.
Have on China itself, because just like shutting Houston not only affected China, it also damages the US, because you can imagine that all the big energy companies operating in China, the US companies will never get a visa again to go there. So there's kind of a mutual issue there about how much does it hurt me versus how much it hurts you. And Shanghai perhaps would impact China significantly as well. Whereas, for example, in Wuhan, where there are only a few US diplomats left at the moment, that wouldn't affect China so much, but in fact it could damage the US, because it would further cut off any access America has to what really has been ground zero in the coronavirus. Hong Kong equally would have a huge impact on the US and less so on China. So it's all about that calculation, and in that regard, Shanghai is possibly off the table.
Is this, China against the world, Roz, and how linked is it to President Xi's leadership? And I think he needs to contest it again in 2022.
Well, that's right. It feels like it's a long way away, but every 5 years, China has a very big party congress where essentially they reaffirm the leadership, and in some cases they make changes. The last one in 2017, Xi essentially got a mandate to rule indefinitely. But even so, his leadership will be questioned at that meeting. And if the economy is still in a very bad place, if the coronavirus is out of control, and if he's not seen as being a strongly assertive leader, which is what he's obviously trying to demonstrate in all of this, is whipping up that nationalism, then it's possible you could see some questioning of his leadership and even a split. So he has a strong incentive to continue to show his assertiveness both at home and abroad. And obviously that's rubbing up against other countries in a bunch of ways, increasingly also places like the UK and Canada and Australia, for example.
Well, you mentioned Australia. Rosalind, you're encyclopedic on this, so I can be unfair and ask a question about the geography of the South China Sea. It's getting a little play in the zeitgeist of the American press this morning, with Woody Island triangulated between Manila, Taiwan, and then over to Vietnam. These little islands in the South China Sea, would you anticipate with our reporting that they will become an important discussion?
Well, they've been an important discussion in sort of fits and starts for about 15 years, but the key is that